What's up guys? Welcome back to my YouTube channel, it's Amas. Today I want to make a quick video for the people who cannot find a strategy and who always seem to be in the wrong side of the market. And today I'm going to be showing you 5 trades you could have caught last week in order to make one-to-one risk to reward base hit scalps using prop firms. Let's get it. One thing I like about this strategy is the fact that it's super simple and you are not overcomplicating your trading. Okay, you don't need VWAP, you don't need EMAs, you don't need any indicators, you only need to look at price action. And there is only 3 steps for this model. The first one being you need price to tap a 15-minute fair value gap. This could be a bearish fair value gap or a bullish fair value gap. Then the second step is while you're entering inside of this fair value gap, are you creating a M1, M2, M3 or M5 fair value gap while entering this fair value gap on the higher time frame. So you basically need price to create a fair value gap on either the M1 to the M5 while entering the higher time frame zone, which is your 15-minute fair value gap. Then the third step is you wait for that fair value gap that got created to get inversed. And let me just show you a few examples of that before we go into the examples. So first thing I'm doing in the strategy is that I go on the 15-minute chart and I mark out my fair value gaps. Okay, those are my zones where I expect buyers or sellers to step in. And right here we have a bullish fair value gap on the 15-minute, and above us we have a bearish fair value gap. So I'm gonna wait for price to tap either one of those zones, and then I will scale down to the 1, 2, 3, 5-minute chart to find a possible reversal entry. So right here, let's see what it does. So we enter this bullish fair value gap first after sweeping sell side liquidity. So what am I going to do? I'm going to scale down to the 1, 2, or 3-minute to see if there's a fair value gap that I can play long off of. And right here, as you can see on the 5-minute chart, we have one fair value gap, which is what you want to see. Okay, you are entering into this 15-minute zone while creating a singular fair value gap on the way down. And what does that small box right here tells you? That fair value gap here on the 5-minute, it tells you that all the sellers are located right here. And if we're truly bearish, we should respect this fair value gap to create new lows. But right here, a good sign of a potential reversal is when you sweep a low, you tap into that 15-minute zone, so 15-minute fair value gap, and then you inverse this 1, 2, 3, or 5-minute gap to the upside. And what do you want to see? You want to see price trading back to an internal high for a one-to-one risk to reward. So right here, we have the first step that is checked. So we tapped into a 15-minute fair value gap. Then the second step is checked also because we created that bearish fair value gap while entering into the 15-minute zone. So that's the second step. The third step, we would need price to close above the zone right here. So it tells us that we have a potential reversal going on, and we will try to go long for a one-to-one risk to reward ratio trade. So right here, we're still respecting this fair value gap. As you can see, if the bodies are still respecting this fair value gap, it means that price is still bearish. You're waiting for price to close bullish above this 5-minute gap. And right here, this is exactly where you get the close above the fair value gap. So this is where you want to enter. You wait for price to pull back to your inverse, and then you go for a one-to-one risk to reward scalp. So you wait for price to come back here as soon as it taps, and then in a few minutes you hit your target. So this is what the scalp looks like, and the reasoning behind what's happening inside of this scalp is basically buying and selling pressure. Of course, we're trading based on inverse, but inverse are gaps created by order flow. That's what you guys need to understand, is that when you get a fair value gap created, it means that sellers are located right here between this candle's high, this candle's low, and this candle's high. And same thing for a bullish fair value gap. Let's say if we have this fair value gap right here, what does that mean? It means that buyers are located between this candle's high and this candle's low right here. So if we disrespect it, we have a lot of chances of seeing lows and potential move down right here, as you can see. So this is what we're looking for. Now let's do the first example. So right here, if I look at this price action, what do I see? I see that there's no bullish gaps created on this way up. So I'm not looking to get in longs anywhere soon. Okay, I need a fair value gap to be created already or to be formed. So right here, if I go to the left, I can see that we formed a 15-minute fair value gap right there. So what am I gonna do? I'm gonna wait for price to tap this zone and see if there's a potential reversal signal. Okay, and what is my reversal signal? I want price first to tap this 15-minute fair value gap that is bearish. Then I want the second confirmation, which is a fair value gap created while entering this 15-minute zone. And then my third confirmation would be wait for price to close below the fair value gap created when it entered the 15-minute gap. And this is where you will take your short position for a potential reversal. Okay, you need to look at where are the buyers, where are the sellers, and right here, this zone is where potential sellers are located. So I'm gonna wait for price to tap this zone, and then I will scale down to a lower time frame. Let's see what's happening right here. As you guys can see, we tapped that 15-minute gap to the left. So then we're gonna scale down to a 1-minute chart to see where are the possible buyers. Right here in this scenario, we have too many fair value gaps created on the 1-minute time frame. We have a fair value gap right here, and we have a fair value gap right here. So it tells me that it's not the good time frame to look at in order to predict what is the zone that is going to lead us to a move to the downside. So then I'm going to scale down to a 2-minute chart and see, was there a singular gap? Same thing here. We have two gaps created while we entered the 15. This is not what we want to see. We entered the 15, which is the first condition that we need for that setup. And then the second condition that we need for that setup is to have a singular fair value gap created while we tap the 15-minute gap. So then on the 2, we still have 2 gaps. Then I'm going to go on the 3-minute chart, and this is exactly where I find my singular fair value gap. If you have a time frame from the 1 to the 5-minute chart that only shows you one fair value gap when you enter the 15-minute zone, this is the time frame that you want to trade, and this is the time frame that you want to wait for the pullback to. Okay, so right here, as you can see, if I just go on the bar replay, what happened is that you swept a high, you swept buy side into the 15-minute zone. This is the first condition right here, and then the second condition would be that you need to create a gap on the way up while tapping this 15-minute zone. Okay, so right here, this is the second condition. Third condition would be to wait for price to close below that zone and retrace back into it for you to take a short position for potential reversal for a 1-to-1 risk to reward scalp. So right here, I'm gonna wait for price to disrespect the zone. This zone was telling me that the buyers were sitting between this candle's high and this candle's low. Now the sellers are the one in control. We disrespected this gap. We are not truly bullish. So then I will wait for price to pull back because there's going to be some covering happening inside of this fair value gap right here. Okay, if the buyers should have been buying and are buying inside of this zone, but they're getting squeezed, they're going to be forced to get out of the position if they get the chance to see break even. Okay, what's happening here really is that the buyers got absolutely ran through, and they tried to go long here, but the positions are currently in drawdown. So what are they going to do? They're going to buy the shares so much to have a chance to get back to their break-even spot, and as soon as they're going to get back to their break-even spot, they're going to click on sell to get out. If they clicked on buy first, then they would have to click on sell, which is going to drive the market in a super aggressive way back to the downside for a 1-to-1 risk to reward scalp. Right here, I only wait for price to pull back. I put my position right here, stop loss right above this high, and I try to go for a 1-to-1 risk to reward ratio trade back to the downside. I don't need more. I only want to be, right more than I lose. I think it's better for the psychology, especially if you're a prop firm trader. So right here, you're in shorts, 3 minutes, 6 minutes, and 9 minutes before you hit your target. And it was a pretty clear trade. We tapped the 15-minute gap, so swept buy side while doing it. We also created a 3-minute fair value gap while tapping this 15-minute one. Then we disrespected the area where the buyers were located, which is the bullish fair value gap created on the way up. And then we waited for the retracement because this is the area where the buyers are going to cover the position. If they were in buys, they're going to click on sales to get out to break even, which is going to drive the market down super aggressively. This was the first example. Let me show you a few more. Now let's take a look at the second example right here. As you guys can see to the left, we have a 15-minute bearish fair value gap. What is this fair value gap telling us? It's telling us that the sellers are located between this candle's low and this candle's high. So if we tap inside of this zone, then we have a potential reversal if we inverse the bullish gaps and we start respecting bearish PD rates. I'm going to go to the 2-minute chart. I'm going to wait for price to tap this zone and see if we can create a fair value gap while tapping this fair value gap on the higher time frame. So as you guys can see, we tapped the 15-minute zone here, which is my 15-minute fair value gap. I know sellers are located between this candle's low, this candle's high on the higher time frame. So then this is my first criteria met. We tapped into the 15-minute fair value gap. So step 1 checked. Then what is my second step? I want to see a bullish fair value gap formed right here. So a fair value gap formed while entering into the 15-minute fair value gap. So this is my second step that is checked. Okay. Now what is my third step? My third step is to wait for price to disrespect this fair value gap that got created while entering this higher time frame zone, and I'm gonna wait for it to get disrespected and create a inverse fair value gap. And as soon as we see that, this is our third step. And then we're just gonna wait for price to pull back to the inverse, and then we're gonna take our short for a 1-to-1 risk to reward play. Now let's wait for this fair value gap to get disrespected. Right here, this is where we have the confirmation and the third criteria met, and this is exactly where you want to go short. You want to wait for price to pull back to this gap right here, because this is the area where those buyers will cover, and then you will go for a 1-to-1 risk to reward play to the downside. So right here on this candle, this is where you would get filled. And right here, this is where you would take out your profits. It took 10 minutes to hit, but this was the play. So if I had to recap it again, we tapped the 15-minute fair value gap, which is a zone where we expect a lot of sellers to step in the market. Then we waited for price to create a bullish fair value gap while entering this bearish zone. Okay, why is that? We wait for price to have a lot of aggression. We want to see buyers sitting right here, and this fair value gap is exactly what's telling us inside of this price action. And then the third step is to wait for price to disrespect the zone, wait for a pullback, and go for a 1-to-1 play back to the downside. Now let's take a look at the third example we have here. As you guys can see, it's on the same day. We had a 15-minute bullish fair value gap form just below price. And what is this fair value gap telling us? It's telling us that we have a lot of buyers that are going to be willing to buy price when we're going to pull back here. So if we enter this zone aggressively and we have a bearish fair value gap formed here on the 1, 2, 3, or 5-minute chart, and we disrespect it, we have a signal that the market is potentially going to reverse at least for a 1-to-1 risk to reward scalp. So right now I'm going to wait for price to tap into this 15-minute gap. We got it right here, so this is the first criteria. Then I'm going to scale down to a 1-minute chart. Right here we are inside of this 15-minute gap. So this is my first criteria met right here. This is the one. The second criteria would be to have a singular fair value gap formed while entering into my 15-minute zone, which is right here met also. And my third criteria would be to wait for price to disrespect the zone and then wait for a pullback to get into longs. And right here, this is exactly what you get inside of that candle. You disrespect this fair value gap right here, and this is exactly where you're trying to go longs with your stop loss right below this low, and you would want to go for a 1-to-1 play right here. Okay, this is your third criteria, which is the inversion fair value gap. So you would go long here, and in 1 minute you hit your target. Okay, so the play would have been to wait for the pullback right there and wait to see what price is going to do right after you entered, and in 1 minute it pushed up and took out the profit. So right here, if I have to recap it again, we tapped the 15-minute zone, which is our first criteria. Then we created a bearish fair value gap while entering into this 15-minute zone, which is my second criteria. Then we inversed the bearish gap that got created to see a potential reversal, which is my third criteria, and we went longs on the pullback and for a 1-to-1 risk to reward ratio. Now let's take a look at the fourth example. I think you guys already understand what's the drill. So right here, as you guys can see, we have a 15-minute fair value gap sitting right above this buy side liquidity level. So now I'm going to scale down to the 1-minute chart and see what's happening when we tap into this 15-minute gap. Right here, we are tapping into this 15-minute gap, which is my first criteria met. Then, as you guys can see right here, we have a fair value gap on the 1 minute, okay? So the buyers are located between this candle's high and this candle's low. So what am I going to wait for? So this is my second criteria. So the first one was this right here. The second one is this one. And as soon as we're going to break below it, this is going to be my third one, okay? And then I'm going to wait for price to pull back to this zone to then take a scalp to the downside. So right here, I'm going to wait for price to disrespect the zone. Right here, this is where we get the inversion fair value gap and where all the buyers inside of this range got squeezed. I'm going to wait for price to pull back to this fair value gap, and then I'm going to take my short for a 1-to-1 risk to reward. This is where I get the pullback. This is where I enter shorts. And as you guys can see, in 1 minute, you hit your target. So if I have to recap it again, tap a 15-minute bearish fair value gap, which is an area where a lot of sellers are located. Then we created a bullish fair value gap while tapping this 15-minute zone, which told us where are the possible buyers inside of this market. Then we waited for price to disrespect this bullish fair value gap that got created, which signals a selling program in the market and that the sellers are the one controlling the market. And we wait for price to pull back to this zone for the possible cover and then go for a 1-to-1. Now let's take a look at the fifth and final example that we have for today. On the same day that we took the shorts right here, we have another possible opportunity to go short again on a reversal. As you guys can see right here, we have a 15-minute bearish fair value gap formed. We know that the sellers are located inside of this zone, and we could see a lot of selling pressure coming from this area. So right now we tapped into this zone, we digged really deep into this zone, and I'm going to scale down to the 2-minute chart and see what's going to happen. Is there any gaps that gets disrespected inside of this range? So right here, I can see that we formed a 2-minute singular fair value gap, okay, which is what I want to see. What is this fair value gap telling me? It's telling me that the buyers are located between this candle's low, this candle's high, and that if we're truly bullish, we should respect this fair value gap in order to create a new high, okay? But if we're bearish and if price is ready to reverse, we're going to disrespect this gap and see potential downside. So right here, the first criteria is met. Okay, we tapped into the 15-minute zone. The second criteria is also met because we created a bullish fair value gap on the way up to tap into the 15-minute zone. And then on this candle, this is where the third criteria is met because we inversed the area where we created the fair value gap. Here we inversed that fair value gap and we disrespected the area where all the buyers were located in the market. So right here, I'm going to wait for price to pull back to my zone, stop loss right above this high, and I'm going to try to go for a 1-to-1 risk to reward play back to the downside. So right here, I'm just going to wait for price to pull back to my zone, and as soon as I get the pullback, this is where I enter shorts, and in a few minutes, you hit your target immediately. So right here, I have to recap it again, tap a 15-minute fair value gap, create a 2-minute bullish fair value gap while tapping the 15-minute zone, then inverse that fair value gap that just got created, wait for the pullback, you stab your entry 1-to-1. This is your entry, this is your model. Stay locked in. Peace out, guys.